Hello, I am Sonia from Zeygos, and today I will share with you an analysis of the financial markets prepared by our research department. If you find value in our content, I invite you to subscribe to our channel. Our quantitative screening model assigns ADOBE overall score of 69, consequently resulting in a buy rating for the stock. Looking at the individual components, there is a very positive view from analysts. The score for the estimates component is 93/100. Over the last 30 days, analysts have slightly revised the estimates for the current year upwards. Regarding the investor interest indicator, the company scores 79/100, indicating a high level of investor interest in the stock. The short interest is very low at 1.2%. The growth indicator scores 60 out of 100. Over the last 5 years, revenues have increased by an average of 18%, while EBITDA has risen by an average of 22%. For the current year, earnings are expected to rise by 10%. The valuation score stands at 43 out of 100. The stock is considered expensive in absolute terms, but in line with the sector in relative terms. The stock's risk level, calculated with historical volatility and beta, is medium, scoring 47, low scores denote high risk, and vice versa. ADOBE is a multinational company that leads in the creative software industry. Founded in 1982 by John Warnock and Charles Geschke, ADOBE has developed a wide range of software products used in various fields, including graphic design, photography, video production, web design, and digital publishing. One of ADOBE's most well-known products is Adobe Photoshop, a powerful image editing and manipulation software widely used by professionals and graphic enthusiasts. Photoshop offers a wide array of advanced tools and functionalities that allow users to creatively modify, enhance, and transform images. Another flagship product of ADOBE is Adobe Illustrator, a vector graphics application that enables the creation of illustrations, logos, icons, and other scalable graphics. Illustrator is widely used in graphic design and the printing industry to produce high-quality visual communication materials. Adobe Premiere Pro is a professional video editing software that offers a broad range of tools and features for editing and producing high-quality videos. It is extensively utilized in the film, television, and digital media industries. Other popular Adobe products include Adobe InDesign for designing and publishing print and digital layouts, Adobe After Effects for video editing and creating special effects, Adobe Lightroom for managing and editing photographic images, and Adobe Acrobat for creating and viewing PDF documents. In recent years, Adobe has adopted a subscription model called Adobe Creative Cloud, which provides access to all its core software products through a monthly or yearly subscription plan. This model has made Adobe's products more accessible and provided users with continuous access to the latest software versions and updates. Furthermore, Adobe has developed and acquired various technologies in the field of artificial intelligence and machine learning, integrating advanced features such as automatic object recognition in images, AI-assisted content generation, and data analysis tools for marketing professionals. The advent of artificial intelligence is influencing and transforming numerous industries, including the creative software sector. There are several ways in which AI could impact Adobe's business. Enhancement of existing functionalities. AI can be used to enhance the capabilities of Adobe's existing products. For instance, AI could be employed to improve object recognition algorithms in Photoshop, making it easier to select and manipulate elements within images. Additionally, AI could optimize automatic image correction tools in Lightroom, simplifying the process of enhancing photos with just one click. Automation of repetitive tasks. AI can automate repetitive and laborious tasks, enabling users to save time and effort. For example, Adobe could integrate automation features in video editing, allowing users to apply special effects or synchronize audio more efficiently through machine learning algorithms. AI-assisted content creation. AI can assist users in generating creative content. Adobe could develop tools that leverage AI to support artists in creating illustrations, graphic designs, or page layouts. For instance, there might be a virtual assistant suggesting creative ideas, color options, or design layouts based on data analysis and past patterns. Enhanced user experiences. AI can be used to improve user experiences through data analysis and product personalization. For instance, Adobe could employ machine learning algorithms to suggest tools and functionalities based on individual user preferences or create personalized learning experiences within its applications. Data analysis and business intelligence. AI can help Adobe gather and analyze data to provide valuable insights to its customers. For instance, Adobe could use AI to analyze product usage patterns and offer recommendations to marketing professionals on optimizing their content strategies or advertising campaigns. On September 15, 2022, Adobe agreed to acquire Figma for $20 billion, half in cash and half in Adobe shares. This marks the largest acquisition ever made by the company. Figma is a private startup with a cloud-based and browser-based collaborative design platform for software developers, designers, product managers, and marketers. As part of the deal, Adobe will also grant 6 million units of restricted stock to Figma's management and employees, valued at approximately $2 billion, which they can vest over 4 years. The acquisition is subject to approval from Figma's shareholders and the usual regulatory reviews. While we consider shareholder approval to be likely, the response from U.S. regulatory authorities remains uncertain as the regulators under the Biden administration have often been resistant to mergers in the technology sector. Adobe reiterated in its Q2 fiscal 2023 earnings call that it aims to complete the acquisition by the end of 2023. The stated motivation for the merger is to bring Adobe's technology design tools, including imaging, illustration, photography, video, and 3D, onto the Figma platform. According to the company's management, Figma alone is projected to have a total potential market of $16.5 billion by 2025 in the areas of design, digital whiteboarding, and collaboration products. Adobe reported its financial results for the second fiscal quarter of 2023, period ended June 2, on June 15, after the market closed. The revenue exceeded management's expectations by $15 million and consensus estimates by $28 million, while non-GAAP EPS surpassed expectations by 10 cents and consensus estimates by 12 cents. With the results of the second fiscal quarter, Adobe also raised its guidance for the full fiscal year 2023. It increased revenue forecasts by $100 million to $19.3 billion at the midpoint of the range and non-GAAP EPS forecasts to $15.70 at the midpoint, representing a 15% growth compared to fiscal year 2022. Second quarter revenue grew by 10% year-over-year, reaching $4.82 billion, with a negative impact of currency exchange rates reducing growth by 3 percentage points. Digital media revenue increased by 10%, reaching $3.5 billion, partly driven by a 9% growth in Creative Cloud revenue. In the second quarter of 2023, the annual recurring revenue, ARR, of Creative Cloud, a significant performance indicator, grew by 8% compared to the previous year, reaching $11.6 billion. This growth rate was slower than the 18% growth in the second quarter of 2022 but showed improvement from the 7% growth in the first quarter of 2023. The overall ARR of the digital media segment increased by 9% year-over-year, reaching $14.1 billion, also slowing down compared to the 15% growth in the second fiscal quarter of 2022 and the 10% growth in the first quarter of 2023. The digital experience segment recorded an 11.6% revenue growth, reaching $1.22 billion, which also decelerated compared to the 17% growth in the second fiscal quarter of 2022. Non-GAAP operating income grew by 10% year-over-year, reaching $2.18 billion, with a slower growth rate compared to the 12% growth in the second quarter of 2022. The non-GAAP operating margin expanded by 30 basis points year-over-year, reaching 45%. The number of employees increased by 7% in the second quarter of 2023. While Adobe did not announce significant layoffs, unlike many competitors in the technology sector, the company significantly reduced the pace of new hires. Non-GAAP EPS increased by 16.6% year-over-year, reaching $3.91. Share repurchases in the last year contributed to a 4% growth in non-GAAP EPS compared to net income growth. Adobe is actively seeking to attract new customers by expanding its current market and pursuing adjacent markets through product segmentation, as seen in offerings like Photoshop for photography enthusiasts. The company has also added new services that add value to a customer's subscription, such as Adobe Stock, introduced in 2015. More recently, Adobe launched Creative Cloud Express, a simpler way to introduce aspiring creators to Adobe's creative tools using a freemium business model. These additional services can justify price increases over time as subscribers perceive added value. In addition to its core growth strategies, Adobe believes that its transition to a cloud-based subscription model supports international expansion, reduces software piracy, and increases penetration in the educational market. Adobe aims to be a leader in 3 of the fastest-growing areas of the digital economy: digital creativity, documents, and customer experience management. Adobe's Creative Cloud, with its software tools for creating all types of web content, is the company's flagship product and main source of revenue. Digital documents rely on Adobe Acrobat's established PDF format, the de facto standard for digital documents, as well as innovations like Adobe Sign, a cloud-based electronic signature service, and Acrobat Liquid Mode, which uses artificial intelligence to enhance document formats for mobile applications. Adobe Experience Cloud helps advertisers manage and measure the effectiveness of digital advertising campaigns. Adobe anticipates that all 3 of its industry categories will continue to experience rapid growth driven by the product as digital commerce accelerates. Adobe's management forecasts that the total addressable market, TAM, of Creative Cloud will reach $63 billion, and the TAM of Document Cloud will reach $32 billion by the end of 2024, implying a combined TAM of the digital media segment of $95 billion. In its core Creative Cloud business, Adobe is striving to create new product categories and expand existing ones, as well as grow its user base. Creative Cloud will offer sophisticated tools for creative professionals and template-based platforms for a wide base of less experienced creators. The company aims to drive adoption and cross-selling of its major Adobe applications across desktop, web, and mobile platforms, in addition to leveraging emerging tools like Stock, Frame.io, and Substance 3D. Adobe's management predicts that the TAM of Experience Cloud will reach $110 billion in 2024, including $33 billion in customer data and insights, $49 billion in content and commerce, $18 billion in customer journey management, and $10 billion in the new category of collaboration in the marketing workflow. While the Experience Cloud business is currently subject to cyclical risks like many industrial companies, Adobe believes that its integrated capabilities of content and data under the company's machine learning platform, called Sensei, provide a significant competitive advantage. The adoption of a SaaS-based cloud model has enabled the company to execute a faster product upgrade cycle and rapidly introduce new adjacent product offerings, increasing the value of its products for existing customers. Adobe's valuations are relatively expensive in absolute terms, but not overly stretched compared to its competitors. The company trades at only a marginal premium compared to competitors. Furthermore, an analysis of its historical P/E ratio reveals that in the past, the stock has traded at considerably higher multiples. Currently, the P/E ratio stands at 28.68x, compared to an industry average of 26.05x. The EV/EBITDA ratio is at 21.55x, compared to an industry average of 13.97x. The P/book ratio is at 11.87, which is notably high.